Glenn, if you can tell us about your bank.
You know, like my peers, we started the bank 14 years ago. A couple weeks ago was our 14th anniversary for the project. $270 million, couple branches. We refer to ourselves as a hybrid community bank, high touch from the community banking standpoint, but high technology. We don't think you need a lot of branches. You think you need to be available, mobile banking, remote deposit, 24 hours a day. We think that's where community banking is going, will go, and a lot of the legacy charters are either going to have to adapt or, fold up. So we think we're really well positioned for where community banking is going in this country. I did mention we're in suburban Philadelphia, Chester County, not dissimilar markets to some of my peers in Virginia, where we have a good business base, but we also have some open space in that really high quality of life. And it's the best county in Pennsylvania when you look at all the statistics. So great place to have a bank.
Great. And then Jeff?
So Jeff Dick with Main Street Bank in Fairfax, Virginia, also in our 15th year. So, we just actually crossed the $1 billion mark this quarter. So that's been good for us. We're primarily a business bank, but much like Glenn, same philosophy. We have 6 branches. Very much high technology, and that's been a great solution for us. It allows us to compete with all the banks, large and small. We've got a strong market share in Northern Virginia and DC, and we'll be actually opening up a branch in DC early in 2019. So, a lot of opportunities. I've been sort of preaching about the scarcity of a bank charter for a few years now, and I do know that the de novo activity has been picking up in this country, which is a good thing, but I do think that community banks that continue to grow organically as opposed to getting into the M&A activity have a better, I think, ability to serve the communities that they live and work in. So it's been a good success story so far.
Great. So moving on to Leonard.
Leonard Szwajkowski, President and CEO of RYFL Financial Incorporated out of Chicago. Based on the south side of Chicago, our subsidiary bank, Royal Savings Bank, is actually an 1887 charter. When I spoke to Bob a little bit ago, comparing that to the Civil War ended in the 1860s or so, it's about 20 years after the Civil War. So the charter of the bank has been around for quite some time. The bank was a mutual up until 2005, so it was initial public offering January 2005, so it became public in 2005. We went through the economic crisis as every other bank out there, stymied in growth a little bit. But since 2016, we have done 2 mergers as well as a failed bank purchase December of last year. And so our asset size at this point is $425 million, which for us is a decent size. We feel that we still need more scale to make things affordable, to continue to get the efficiency level up to where we believe it needs to be. So we've inherited our branches through merger. We do believe in organic growth. We'll talk about organic growth probably later in the presentation. But we pretty much were born from mergers from banks that were close to failure, where we made the purchases and continued on with the community banking theme. Currently have 9 offices, 9 branch offices, primarily on the south side of the city of Chicago, 1 in the western suburbs of Chicago, and 1 up in Niles. We're primarily a commercial bank, CRE lenders, so to speak, some C&I. We do 1 to 4 family lending, but primarily commercial bank, dealing with small to closely held businesses, under $30 million approximately in terms of gross earnings, so to speak. So glad to be here and looking forward to participating in today's event.
Great, thank you so much. And then Glenn.
Hi, Glenn Russ with Virginia National Bankshares. We are located in Central Virginia, Charlottesville, Virginia to be exact. We have about $630 million in assets, and then we have another $540 in assets under management on our investment side bank and trust and estate services. Like most community banks, the recession was kind of tough, but we went through it easily. And like most community banks, I think they're going to be very successful moving forward. We continue to shrink our branch sizes, replacing that with technology, and actually have eliminated a few branches over in the past few years as well. We have a branch in Winchester, Virginia, and the rest of the 4 are located in Charlottesville and the surrounding area of Albemarle County. We believe that that size needs to get a little bit bigger, like most community banks. I think size is becoming more and more important about the $2 billion mark, but that has not stopped us from being very efficient on our efficiency ratio, our ROAE, and our ROAA. And so we're going to concentrate on those kind of metrics. In the past, we've concentrated on those, and we're really focused and laser focused on those. We believe that those values are what's helped prompt our stock price to go up quite a bit. And so we're going to continue those metrics as best we can. We're a commercial bank. We don't do very much C&I at all. We're primarily commercial real estate, and we have a high touch. So the folks in our branches are very well trained, and they know almost everybody in our towns. So that's going to be a big help for us as well. So we believe that community banking still has a future in the country, even though there are less of us today than there were a few years ago, and that number continues to shrink. But we find that when people finally move their accounts over to us, they find a very pleasant experience they have not been able to experience in quite a few years at the larger banks.